Now, interest rates have gone up a lot recently in the United States, right? You could get 5.5% on treasuries. Not too long ago, treasury yields were basically zero. You couldn't get anything on 90-day treasuries. But the price of gold is much higher today when you can get 5.5% than it was when you got 0.25%. What is that telling you? What is that telling you that the markets think about that 5.5%? They don't care. The markets aren't being fooled by that number because they'd rather own gold. They're more interested in owning gold now when interest rates are over 5% than they were when they were practically zero. And that's because the gold buyers understand that that 5.5% yield is BS, that real yields may actually be lower now than they were when nominal yields were near zero.
During the month of May, gold surged to an all-time high of $2,328, while silver broke through the $30 per ounce mark and held strong. Despite these significant movements, many investors are distracted by the buzz around Ethereum ETFs. Peter Schiff highlights a crucial, often overlooked narrative, the real reason behind the US government's and banks' stance on gold. With rising inflation and a political environment that has abandoned fiscal responsibility, the preference for gold over traditional investments is becoming more evident. Interest rates might be at 5.5%, but real yields are likely lower now than when nominal rates were near zero, reflecting a deep skepticism about the stability of fiat currencies. This environment is pushing more investors towards gold, viewing it as a safe haven. As gold and silver continue to rise unnoticed by mainstream media, it's essential to understand why these assets are gaining traction.
Gold during the month of May rise to a new all-time record high, even though it ended the month on a bit of a decline. But if I look at the price right now on Sunday night for the price of gold, we're still trading above 2,300. We're 2,328. So a solid breakout in the month of May. And more particular or more significant is the breakout in the price of silver, which went north of $30 an ounce and never looked back. It got as high as $32.50, I believe, and then pulled back. But it never even got back below 30. It's held up above 30 and closed the month above 30. So that is extremely significant. But I think the strength in the stock market is causing investors really not to pay attention. And of course, all the continued noise surrounding Bitcoin. This time, it's really not Bitcoin, but Ethereum, because everybody is now focusing on the fact that the Ethereum ETF is going to be approved. And there's a whole bunch of these ETFs that are in the queue because the same companies that are making money on Bitcoin ETFs, because they get to charge fees to basically custody nothing. Well, the same companies that are charging to custody Bitcoin, well, they're going to charge the same group of people to custody Ethereum. But, I think it's the bulls are missing the point that there isn't a whole lot of money on the sideline waiting to buy Ethereum. I think the money that whoever bought these Bitcoin ETFs, that money is already in the Bitcoin ETFs. That's the crypto money. That's the crypto allocation. It's not that people are like, well, oh, now there's Ether. Oh, let me buy a similar amount of Ether. I already put $10,000 into Bitcoin, so let me put another $10,000 into Ether. I think if that individual wanted to put $20,000 into crypto, it would already be in Bitcoin, right? People aren't holding back, waiting for the Ethereum ETF. I think they already put their chips on the table and they got them on Bitcoin. Now, if the same companies roll out these Ethereum ETFs, I think what investors are more likely to do is move some of their Bitcoin chips and slide them over to the Ethereum ETF because that's their allocation. Hey, I got $10,000 in crypto. I put it all in Bitcoin because that's all there was. Now there's two. Now there's Bitcoin and there's Ethereum. Well, let me shift 5 grand over to Ether, and I got both bases covered, right? I'm betting on two horses instead of one. That's what I think is more likely to happen. So why is that bullish for Bitcoin? It's not. It means that a lot of Bitcoin is going to have to get sold in order to free up the money to buy the Ethereum. And so I don't see this as another big catalyst for a huge move up in Bitcoin. It could be a catalyst for a big move down in Bitcoin, which is going to drag down Ethereum, right? So I don't know that this is bullish for any of the cryptos, but it is a lot of noise. And it is kind of sucking the oxygen out of the room with respect to gold and silver, because again, Wall Street sees Bitcoin as digital gold, as an alternative to gold, as an alternative to silver. So the fact that all of these news coverage, in fact, I read a story that came out that basically said that most financial advisors were not willing to recommend the Bitcoin ETFs, which is not news to me. It's something that I always said was going to happen. I didn't see how financial advisors were going to recommend these products. It's just not worth it to them because they're exposing themselves to a lot of liability. If the ETFs go down, they can get sued. And it's very easy to sue your stockbroker. It's very easy to sue your advisor. And so why go out on the limb? I just didn't think there was any reason. I didn't even think most of the firms would allow their reps to recommend this stuff. And they haven't done it. And so I was watching, the CNBC did a report on Friday about this story that came out about the fact that the advisor community is not recommending it, because the whole point supposedly of the Bitcoin ETFs was so the advisor community could recommend it. That supposedly there was all these investment professionals that really wanted to allocate to Bitcoin, but they didn't have a way of doing it within the regulatory framework that they operated. And so we just needed these ETFs, and now all these advisors were going to start allocating money to Bitcoin. Well, it's not happening. And so what was the point of all this, right? It was just to facilitate another vehicle for gambling. Yeah, there are some investors, look, they buy GameStop, they bought AMC. I mean, there are people that'll buy anything. They don't care, right? They just going to jump on any bandwagon. They think they can make some money. And that's what happened with the Bitcoin ETFs. That's all you got. And again, I don't think there's a new pool of money waiting around for the Ethereum ETF. It's the same money. But the reason I'm bringing it up now really is because people should be talking about $2,400 gold, $2,300 gold. People should be asking the question, why is gold at this price? And if it's at this price, what's going to stop it from going to a higher price? Or why is silver above $30 an ounce? What's going on? What is that telling you? Because these, again, are monetary metals. They're not just commodities. They're special in that they are monetary alternatives to fiat currency. They are alternatives to the dollar. Now, interest rates have gone up a lot recently in the United States, right? You can get 5.5% on treasuries. Not too long ago, treasury yields were basically zero. You couldn't get anything on 90-day treasuries. But the price of gold is much higher today when you can get 5.5% than it was when you got 0.25%. What is that telling you? What is that telling you that the markets think about that 5.5%? They don't care. The markets aren't being fooled by that number because they'd rather own gold. They're more interested in owning gold now when interest rates are over 5% than they were when they were practically zero. And that's because the gold buyers understand that 5.5% yield is BS. That real yields may actually be lower now than they were when nominal yields were near zero, because inflation is so much higher. But not only is inflation so much higher now than it was when rates were zero, but the anticipation or the expectation of where inflation is going to be in the future is so much higher, especially since basically both political parties have obviously thrown in the towel on fiscal responsibility. Nobody cares. Nobody even wants to propose a committee to study the problem of the deficit. Certainly, the Federal Reserve doesn't want to weigh in on it. No, they refuse to say, oh, we got to stay in our lane. That's what Powell said. Oh, I can't talk about the budget deficits. We just take it as it comes, right? We just take whatever fiscal policy Congress wants to hand us, right? We're indifferent. We don't really care. Well, the Fed doesn't care. Why should anybody care, right? Biden doesn't care. Trump doesn't care. Nobody cares, right? I mean, so we, at least in the past, some people pretended to care. Now, I knew it was all BS. That didn't matter what they said. It was all politics. But at this point, they don't even bother with the pretense because no one even thinks it's a problem anymore because the problem has gotten so big without a supposed catastrophe that it's supposedly no longer a problem. And people are tired of being warned about the debt because nothing has happened. And of course, now you got the popularity of the MMT that are coming out and saying, you see, look, we don't need to worry about the debt. It's just a number. Who cares? Right? And so that's the mentality. Well, that is what's driving the buying in gold and silver. And this is just getting started, right? This is a huge wake up. What's happening? And so we've seen the original or the initial breakout to new highs in gold, above 30 in silver, and nobody has noticed it. It's basically happened without any fanfare, completely in obscurity. And to me, that's what makes it that much more real. Because even though gold is at a new high, it's a contrarian investment to buy it.
Thanks for tuning in. To recap, we explored the remarkable surge in gold and silver prices, with gold hitting an all-time high of $2,328 and silver maintaining its position above $30 per ounce. We also delved into the significant implications of these movements amidst the distraction of the Ethereum ETFs and the broader economic landscape characterized by high inflation and a disregard for fiscal responsibility. This scenario is driving more investors to view gold as a safer alternative to fiat currencies. We hope you found today's analysis insightful. If you did, please give this video a thumbs up, subscribe to our channel, and hit the notification bell so you never miss an update. We'd love to hear your thoughts, so share your opinions in the comments section below.